Oil advanced for a second day in New York on speculation fuel demand will increase as Europe discusses plans to tame the sovereign debt crisis that has slowed its economy and roiled financial markets. Futures climbed as much as 1.6% as equities rallied. The European Central Bank may debate covered bond purchases and interest rate cuts, a Euro region central bank official said. The European Union accounted for 16% of global oil demand last year, according to BP plc's annual statistical review of the world energy. U.S. crude stockpiles rose last week, an Energy Department report tomorrow may show. Crude for November delivery gained as much as $1.31 or to $81.55 a barrel in electronic trading on the New York Mercantile Exchange and was at $80.97 at 10:33 a.m. Sydney time. The contact yesterday rose 0.5% to $80.24, and oil has dropped 8.9% this month, 15% this quarter. Prices are down 11% this year. Brent futures for November settlement gained 61 cents or 0.6% to $104.55 a barrel on the London-based ICE Futures Europe exchange. The European benchmark contract was at a premium of $23.58 to U.S. futures, compared with a record of $26.87 on September 6, based on the front-month settlement prices. U.S. crude stockpiles probably climbed 2.2 million barrels last week, according to the median of 11 analyst estimates in a Bloomberg News survey. Gasoline supplies rose 1 million barrels and inventories of distillate fuel, a category that includes heating oil and diesel, increased by 500,000 barrels.
To talk to us more on oil, we have Kun Thosang Chai-Prawat, who is the Commercial Planning Manager of the Thai Oil Public Company Limited. สวัสดีค่ะ Kun Thosang.
สวัสดีครับ
ค่ะสวัสดีค่ะคุณมีนาคุณองค์อนันต์
Kun Thosang, could you brief us on the situation of the oil today, both globally and locally, now that the market as a whole is facing equity sell-off?
Yes, last week the global oil prices, both WTI and Brent, had lost over 9% or dropped over $8 per barrel last week. WTI was lower than $80 per barrel, while Brent is still hovering around $105 per barrel. The drop was triggered by investor fears of another global economic recession, which is similar to the sell-off in the equity market and also in the gold. As for the local market, we saw a reduction as a result of the decline in the global oil prices. We saw a reduction in the pump prices since last week. On Friday, we got 40-cent reduction in both gasoline and also diesel. And on Saturday, we have another 40-cent per liter reduction for the gasoline prices. Yes.
Yeah, so is local consumption... what's the tendency of local consumption at this point?
Local consumption, if you look at the oil prices alone, will tend to increase because we have a lower pump price. However, if you look into the individual products, you will see that the demand for the gasoline has been increasing because we have quite a big reduction of the pump prices. On the other hand, for the diesel, even though we have a decline in the prices as well, but due to the flood situation in the upcountries, the demand has actually declined. If you look at the number for early this month, for the first half of September, we saw a decline of diesel demand from around 50 to 55 million liters per day to drop to only around 47 million liters per day.
Okay, so the government's first car incentive is not really put into effect yet, as people still don't have their cars, I would say. So, Kun Thosang, so how would the government's policies to tame down the oil and gas prices look so far when the numbers are now moving with the global prices?
Yes, actually, we think that the government policy to tame down oil prices it seems to be working, especially on reducing the inflation rate of the country. And with the global prices has been coming down on all fronts, with the commodity prices coming down as well. So we think the inflation rate in the country will also drop going into the fourth quarter.
Okay, and what would be the energy price forecast for the fourth quarter?
For the fourth quarter, the big assumption would be on what happened with the Europe debt crisis.
Right.
If it doesn't, exaggerate beyond the current situation, that the grid will get its debts refinanced from the EU and IMF, we still expect oil prices to be able to stand for Brent above $100 per barrel. And the reason for that is because of the tight fundamental for the oil market. Demand will likely to increase for the fourth quarter because of the winter demand. And at the same time, supply is quite tight because we are still waiting whether the crude oil from Libya can actually come out. And the market expectation is that it should not be able to come out so easily. So that's the general expectation for Q4. However, if the European debt crisis has become, a situation similar to 2008 when we have a bankruptcy of Lehman Brothers, then the oil prices could drop significantly similar to 2008. But we believe that, all the governments will try every effort to, to prevent such situation to happen.
Okay, well, thank you very much, Khun Thao Sang, for being with us today.
Thank you so much.
Okay, thank you.
สวัสดีครับ บ๊ายบาย